And as I just foreshadowed, we're now going to talk about all things gold. It recently hit $2,000 an ounce. Lots of headlines. The gold bugs were certainly all having a great time. And then all the headlines disappeared. Well, for a fresh look at what's happening in the gold sector, we're going to bring in Davide Bosio from Shaw and Partners. Sorry, we're just connecting him right now, but in the meantime, let's do what we do best on a Friday afternoon and just have a look around the grounds here. Just here, it's still certainly a sea of green here. We've got that ASX 200 up over 53 points, and that is a rise of 0.7%. Financials are doing very well after, as I say, a very poor start to the week. It looks like the banks have caught themselves a tailwind, and that is certainly what we're just discussing with Jason. All right, we're all good to go here, and gold was $2,000 an ounce not so long ago. The gold bugs were certainly singing from the same song sheet, and now suddenly it's gone very quiet. So what's going on with the gold space? Is it worth taking a fresh look at the sector? We have Davide Bosio from Shaw and Partners. Good afternoon. Well, yes, it's afternoon there over in Perth. Welcome to the program. Now, gold, it hit all the headlines and now it's gone very, very quiet. What's going on in this space?
Yes, it continues to shake out the non-believers, but we remain steadfast in our view that there is life in the sector, but it has been a tricky one. Only call it a week ago, we saw gold really trying to get through that $2,000 barrier yet again, and within a few days it was back below 1900, albeit briefly on the back of those severe sell-offs we had late last week, and obviously this renewed inflation discussion and inflation numbers being quite scary, I guess, across the board.
And the inflation numbers just get worse and worse. So why isn't that giving gold more of a bid or consistent bid?
Yeah, so it's tricky, and I think what I've noticed through my career, especially when you look at the gold price itself, is although many investors do perceive gold as there's a flight to gold as a bit of a safe haven in times of fear, in times of uncertainty, there is strength in that sector. Through my career, I've always experienced a sell-off in the gold market itself when we get large corrections in the market, and I think there's a few reasons for that. So when the equity markets fall, and we saw quite a few pretty significant days last week and this week where the markets came off, there is a flight to liquidity, and gold is a liquid asset. So there are investors who have gold holdings, but there are also a significant amount of money. There's also a significant amount of money invested in gold ETFs that really are, for lack of a better word, a security. It's like holding a share. So if you see markets sell off and you get into the sell mode across your portfolio, well, you can sell a gold ETF just as quickly as you can a normal equity holding. So we see that often does result in a sell-off across that sector, because if you're looking for liquidity, well, then it is a liquid asset. And but I also believe that we'll find our feet. So to answer your question around inflation, we still need to look at what that means. And gold, fortunately, there is an underlying value of an asset behind the instrument. So if you are holding physical gold, at least you can rest assured that there is some value behind that asset. However, you look at the correlation between, and what our analyst Peter O'Connor, who frequents this show, also reminds us is, look at the relationship between real interest rates and gold, and there is a correlation there where we still have these negative real interest rates. So although we expect this interest rate environment to, we're going to see increases in that interest rate number, the inflation number is extremely high, which is giving us a negative real interest rate, which historically is strong for gold.
This is probably a generic question. I mean, I remember when gold was, $250 an ounce, but that just shows how long I've been around. The Aussie gold producers, what is their average cost of production? Because we're always talking about iron ore, and iron ore goes up and down. But let's face it, our producers are very low cost producers, so it's pure profit. What does it look like for the Aussie goldies? Does it really matter what the gold price is? Is there a floor?
Oh, I think it certainly matters because margins ultimately drive valuations when you're a producer. When you're in the speculative end of the market, and we all have we've seen how, call it, the battery metals players, etc., have behaved. But often you can have the luxury of fantastic market capitalisation and enterprise value when you're an explorer in that speculative end, because it is very hard to value those sorts of businesses. The unfortunate reality of being a producer in any sector is that you have a P&L and you have a profit number that analysts can then use to value your business. So I think, to answer that question, I think the gold price still is important, but even at today's price of, call it, 1900 US, most of the producers are having healthy margins. So I think we're still in a, and I think if you speak to any producer, they'd say, if you can give me 1900 US, I'll take that any day of the week, because we can make money at those levels. So if you're looking at, I guess, ballpark numbers in terms of production, a lot of companies are trying to get their costs in under 1250 to 1500 US. Probably the higher cost, if you've got a terribly good project, you're getting it under 1,000 US in terms of cost. So there's still very healthy margins. But what we have seen, and we've seen a lot more, especially over the last few weeks, a number of companies changing their guidance, talking about the cost blowouts, and that shows you that there is a real squeeze on margins across all businesses. And I think that's across industrials through to minerals producers.
And of course, the other discussion we had, that even though gold was rallying, our goldies didn't really keep up. So what do you think about in this space? Are there some preferred goldies that are better than others?
Oh, absolutely. I think, well, firstly, I think the sector has suffered a little bit from a lack of euphoria. Again, we talk about lithium, we talk about some of the rare earth plays, and anything really battery metal related they've really rallied. There's a massive tailwind there. Investors really looking to exploit that sector and the theme, which is obviously a very strong one in the current environment. Gold has been very much overlooked and probably under invested by a lot of the community. And I know I talk to a number of investors every day, and I've got a team of advisors that I speak to regularly. And on occasion, if I mention the word gold too many times, they start yawning. So it's a little bit like that, where at the moment it's probably slightly out of favour from a lot of investors. But I too, I started broking over 20 years ago now, and gold was around $200, $250 an ounce. So I can look back and say, well, in 20 years' time, we've seen almost a tenfold increase in that underlying commodity or metal price. And I'd be brave enough to say in another 20 years' time, it's probably going to be up another 5 or 10 times. I think that's perfectly reasonable. But I think we are missing a lot of that euphoria. If you look at some of our analyst comments, and again, Peter does follow a number of the large cap producers. Their balance sheets are going pretty well. They're typically very low on debt. They've got very strong cash positions, although their margins are coming under pressure due to COVID issues, labour issues, and just this general inflation, which is real. When you talk about fuel, logistics, etc., it's hurting every business. But there's still margin in these businesses. So I think they're going to see it through. We've seen a steady wave of, or this underlying theme around M&A as well. So there is M&A activity every week bubbling along, and to me, again, it's only a matter of time before analysts say, well, these companies are producing a lot of free cash flow and they're relatively cheap compared to some of the sectors out there.
So, of course, the household name you have to say is Newcrest. Is that a top pick, or some other names spring to mind?
Yeah, so we cover a lot of the large cap companies as well as a few of the small caps or mid caps. But Newcrest has been one of those stocks that I don't want to call it a serial underperformer, but if you like this sector, well, you have to view these guys that they're real, they're big, they've got significant production, and it's across a number of jurisdictions. But Newcrest is definitely in our list. Companies like Evolution, Regis, Ramelius, they're all stocks that we cover and we have the same view on. And I think if you look at companies like Northern Star, again, we have a buy recommendation on that stock. They have had some challenges with their acquisition of Pogo, so they've moved into North America. That's created some challenges for them, albeit they still have a very, very strong position. They've gone through a period of transition from a leadership perspective, but their assets are tier one. They're a $10 billion company. They've got an extremely good board, extremely good balance sheet. They're the companies that are going to drive this sector going forward.
And I just have to ask you one cheeky one on iron ore. It seems to be plus or minus $150. Are we nice and stable at this point?
I feel that it's a very, very hard one to pick, and I think most analysts across many different firms like ours probably think that price is unsustainable for the long term, but I've been hearing that for a very, very long time. So again, I'm going to say, for the sake of my state being West Australia, we've come a long way. In the last 24 hours, we've moved to a no mask mandate. We've started to reintroduce our COVID policy in line with the rest of the world, which is a massive step forward. I'd like to say that we'd like to see our iron ore price stay stronger for longer. And I think with what's going on in China and the rest of the world, you can see that this underlying demand for commodities is real. We've still got a lot of stimulus in the system, albeit we are moving into an environment of higher interest rates. It takes a long time to curb the spend. It takes a long time to slow down some of the infrastructure plays and what's going on across, call it building and construction industries as well. So I think there's a very, very strong underlying theme around development and consumption and therefore demand around steel. So I'd like to think that the producers in iron ore, this is such a great time for them. And even though their cost side again is getting out of hand, we've seen Rio, BHP, and Fortescue all have cost blowouts around the iron ore businesses. They are making a huge amount of money, and that's good for the country. A lot of it, that is fueling this country.